Hi, I want to give a quick explanation to essential question number 1 that was given on, looks like November 14th, 2011, so that's the fall of 2011. And so let's go ahead and get started. It looks like what we're dealing with right now is a car rental company. So, we're going to have some interesting items going on here. So let's start off in color black. And the first one is take out a loan, zero interest loan. This is to make it so it's easier later on when you make a payment. So what's going on here is that you're acquiring some cash. That's what the loan's all about. And at the same time, because your liabilities and owner equity are supposed to equal to your assets, you're getting an increase in liabilities that's there. Now also because you're taking out a loan, that means that you're getting some cash or losing some cash from finance. And so what you're going to see is an increase in cash from finance. Just remember, anytime you see cash moving around, something's probably going to happen on the cash flow statement. So let's go ahead and change color to blue. Purchase 10 new vehicles for the company rental fleet. So what's going on here is that you're presumably purchasing these things with cash. So you're going to see some current assets fall. And at the same time, some of your fixed assets are going to increase because those fixed assets are the cars. Purchase and sale of assets shows up as a loss of cash because remember, the cash flew out the window in order to buy those cars. So you see a decrease in cash from investment, and that should pretty much cover you on that question. So let's switch to red. It's about to get busy. Holidays are coming up. So you hire 2 new receptionists. Well, hey, we're talking about just the expenses right there. So you've got an increase in operating expenses. This means net income goes down. Remember that operating expenses is an increase, so it's more positive. It's on the income statement. The rule is that the usual direction is a positive direction. Again, net income usually feeds back over to cash from operations, so you'll see a decrease in cash from operations. So you're covered. So let's go ahead and grab a new color. So this one will be orange. Some of the cars are damaged during the night. You have to pay for 5 new windshield repairs to them. Well, this is just going to be an increase in expenses again. And we'll have a decrease in net income. And we'll have a decrease in cash from operations. So it's essentially the same as the red one. And then we'll get to the one which has to do with paying the loan. So remember, we got that zero interest loan. Welcome to that one. And we're going to go ahead and make a payment. Now the payment on this shows up as a decrease, which you're going to have in cash, and it's balanced off by a decrease in liabilities. So the balance sheet stuff is easy, the balance sheet balances, but you also are going to have a decrease in cash from finance, and that's what happens when you pay off loans. So let's get to the next one, which is going to be another one that's like the opposite of a transaction you made before. You sell off some of the older vehicles in your fleet. Easy one for this one is that you're going to see a decrease in your fixed assets, those are the cars, an increase in your current assets, that's the cash. And please note that balance sheet balances out all by itself. And what you're going to see is an increase in cash from investments. Now later on you may be doing some things with gains taxes and stuff like that, but keep this thing nice and simple. And then let's switch to purple for right here and say that you raise your rental rates and don't lose any customers. So hey, operating revenue goes up, net income goes up because it always feeds through, cash from operations goes up. And then we're going to have that friend become business partner again. By the way, I don't recommend this. What we're going to see right there is you let your friend become business partner for $10,000. What you're going to see is an increase in assets, that's the cash, and an increase in owner equity to balance it off. Anytime you got cash flowing in because the owner equity changes, always do the move in finance. So here's that increase in cash that you got right there in the finance section. So there's a explanation for essential question number 1 that you'll have from November 14th, 2011.